Question 1. Which of the following is true regarding the responsibilities of an independent adjuster when handling a claim? A. The independent adjuster is only responsible for making payment decisions and not involved in investigation or negotiation. B. Independent adjusters handle claims on behalf of insurance companies, but are not permitted to engage in negotiations with claimants. C. Independent adjusters are employed by insurance companies and act as their agents for processing claims, including investigation, evaluation, and settlement. D. Independent adjusters are hired by claimants to represent their interests during the claim process and have the same legal standing as public adjusters. Answer C. Explanation. Independent adjusters are contracted by insurance companies to assist in processing claims. They play an essential role in investigating the claim, evaluating the damages, negotiating with claimants, and recommending settlements to the insurer. They are not hired by the claimants and do not act as agents for the policyholders. They must adhere to all state and insurance regulations regarding claims handling. Option C is the correct statement because it describes the adjuster's role accurately. Option A is incorrect because independent adjusters are involved in investigations and negotiations. Option B is incorrect because independent adjusters can engage in negotiations. Option D is incorrect because independent adjusters are not hired by claimants, unlike public adjusters who represent the interests of policyholders. Question 2. Scenario: Mr. Rodriguez's home is damaged by a fire and he files a claim under his homeowner's insurance policy. Upon reviewing the policy, the adjuster notices that Mr. Rodriguez had not updated his coverage to reflect recent renovations, which significantly increased the home's value. What should the adjuster do in this situation? A. Deny the claim due to the lack of proper coverage for the updated value of the home. B. Adjust the claim payout to reflect the original value of the home prior to the renovations based on the terms of the policy. C. Inform Mr. Rodriguez that he may need to update his policy, but proceed with the claim investigation and settlement based on the current coverage. D. Immediately terminate the claim process and refer the case to legal counsel for a breach of contract issue. Answer C. Explanation. In this scenario, the adjuster should inform Mr. Rodriguez about the potential coverage gap due to the lack of updated policy information, but still proceed with the claim investigation and settlement process based on the current coverage. This approach ensures that the adjuster remains compliant with the claim handling process, as the insurer must honor the existing terms of the policy until any changes are made by the policyholder. The adjuster should explain to Mr. Rodriguez that he may need to update his coverage in the future, but this does not invalidate the current claim. Option A is incorrect because it disregards the insurance company's responsibility to pay based on the existing policy. Option B is incorrect as it fails to acknowledge the actual policyholder's responsibilities to update coverage. Option D is incorrect since the breach of contract may not be the proper action. The adjuster should proceed with the claim based on existing terms. Question 3. Which of the following best describes the process of subrogation in the claims adjustment process? A. Subrogation allows the insurance company to recover its expenses from a third party responsible for the loss after compensating the policyholder. B. Subrogation requires the policyholder to pay back the insurance company if a third party is found responsible for the loss. C. Subrogation refers to the process by which the insurance company covers only the third party's portion of the claim without involving the policyholder. D. Subrogation is the process of adjusting claims for the policyholder's insurance company and does not involve any legal recovery or action. Answer A. Explanation. Subrogation is the process by which an insurance company seeks to recover the amount paid to the policyholder from the third party responsible for the loss. And after compensating the insured, the insurer can pursue the responsible party or their insurance company to recover the funds. This process is a common practice in claims handling, especially in cases involving property damage or liability claims. Option B is incorrect because subrogation involves the insurer recovering funds, not the policyholder. Option C is incorrect because subrogation does not involve covering only the third party's portion. It's the insurer's right to recover the full amount paid out. Option D is incorrect as subrogation involves legal recovery actions and is not simply part of claims adjustment without further action. Question 4. Which of the following is the primary responsibility of a claims adjuster during the investigation process? A. To ensure that the policyholder receives the maximum payout regardless of the claim details. B. To gather evidence, evaluate damages, and determine whether the claim meets policy terms and conditions. C. To approve all claims without investigating further as the insurer already holds sufficient information. D. To make legal decisions on behalf of the insurer about the validity of the claim and its potential litigation. Answer: B. Explanation. The primary responsibility of the claims adjuster is to conduct a thorough investigation by gathering evidence, evaluating damages, and assessing whether the claim meets the policy's terms and conditions. This involves reviewing the policy, interviewing claimants and witnesses, and inspecting damages to ensure that the claim is valid. Option A is incorrect because the adjuster is bound by the policy terms and cannot guarantee maximum payouts. Option C is incorrect because the adjuster must investigate each claim to ensure accuracy and fairness. Option D is incorrect because the adjuster does not make legal decisions but works in accordance with legal and contractual guidelines. Question 5. Which of the following best describes a replacement cost in property insurance claims? A. The market value of the property at the time of the loss, including depreciation. B. The cost to replace the damaged property with new items of like kind and quality without considering depreciation. C. The minimum amount of money the insurer is obligated to pay out based on the policy's face value. D. The amount the insurer will pay, which is calculated by subtracting depreciation from the policy's limit. Answer: B. Explanation. Replacement cost refers to the amount it would take to replace the damaged property with new property of like kind and quality without considering depreciation. This is typically how most property insurance policies calculate the payout for claims. Option A is incorrect because it refers to market value, not replacement cost. Option C is incorrect because it does not capture the full concept of replacement cost, which is not based on the face value of the policy. Option D is incorrect because it describes actual cash value, which accounts for depreciation, not replacement cost. Question 6. Scenario: Mrs. Thompson's business suffered water damage from a burst pipe and her insurance policy includes a business interruption provision. However, her business had not been operating for the past few months due to maintenance issues and therefore had no income during that period. What is the best course of action for the adjuster in this scenario? A. Deny the business interruption claim as there was no income during the period before the damage occurred. B. Pay the claim based on the projected income had the business been operating, assuming the maintenance would have been completed sooner. C. Proceed with the claim, but only reimburse for the physical damage to the property, not for the business loss. D. Investigate whether the business would have had operational income regardless of the maintenance issues, and then evaluate the claim based on actual earnings at the time of the loss. Answer: D. Explanation. In this situation, the adjuster must assess the actual earnings or potential operational income during the period of interruption. The business interruption provision typically covers losses that directly result from damage to the business property. However, if the business was not operational due to prior maintenance issues, the adjuster needs to assess whether the business would have been earning income even without the damage. Option A is incorrect because denying the claim outright without investigation into actual circumstances may overlook key factors. Option B is incorrect because the adjuster cannot simply assume projected income without assessing the factual situation. Option C is incorrect because it ignores the claim for business interruption, which is part of the coverage. Question 7. Which of the following is a key component of the Fair Claims Settlement Practices Regulations? A. Insurance companies must settle claims only when all parties agree to the terms of the settlement. B. Claims adjusters must delay claim payments until the investigation is complete, regardless of policy terms. C. Insurance companies must handle claims in good faith and attempt to reach a fair settlement promptly. D. Claims adjusters are allowed to settle claims at their discretion without any formal review from the insurer. Answer: C. Explanation. The Fair Claims Settlement Practices Regulations require insurance companies to handle claims in good faith and attempt to settle them promptly and fairly. This includes timely investigation, appropriate offer of settlement, and transparency with claimants throughout the claims process. Option A is incorrect because while mutual agreement is important, claims should not be delayed until all parties agree. Option B is incorrect because claims must be handled according to policy terms and undue delays are considered unfair practices. Option D is incorrect because claims adjusters do not have the discretion to settle claims without proper review and authorization from the insurer. Question 8. In the context of liability coverage, what is the primary purpose of umbrella insurance? A. To provide coverage for all types of claims, regardless of the policyholder's circumstances. B. To extend liability coverage beyond the limits of standard homeowners, automobile, or business insurance policies. C. To cover only natural disaster-related damages above the limits of a policyholder's other policies. D. To cover the costs associated with medical treatment for injuries caused by an accident, regardless of fault. Answer: B. Explanation. Umbrella insurance is designed to provide additional liability coverage beyond the limits of standard policies such as homeowners, automobile, or business insurance. This coverage kicks in when the limits of these policies are exhausted, protecting the policyholder from large liability claims. Option A is incorrect because umbrella insurance is not a blanket coverage for all types of claims. Option C is incorrect because umbrella insurance is not limited to natural disasters, it extends general liability coverage. Option D is incorrect because umbrella insurance covers liability claims, not medical treatment. Question 9. Which of the following is a key factor that the adjuster must assess when evaluating business interruption claims? A. The time of year the loss occurred and its impact on business revenues. B. Whether the business owner has updated their insurance policy in the last 12 months. C. The depreciation of the property involved in the interruption. D. Whether the business owner has any unpaid debts or loans. Answer A. Explanation. The adjuster must assess the time of year the loss occurred to determine how the business's revenues may have been impacted by the interruption. Certain seasons may generate more income than others, which will influence the claim amount for business interruption. Option B is incorrect because the frequency of policy updates does not directly influence the business interruption claim itself. Option C is incorrect because depreciation affects property damage claims, not business interruption claims. Option D is incorrect as unpaid debts are not a primary factor in business interruption claims, which focus on loss of income. Question 10. Which of the following is a key duty of an adjuster when handling a claim involving a natural disaster? A. Immediately issue payments to all policyholders affected by the disaster. B. Assess the claim based on the current damages without considering any future environmental risks. C. Coordinate with government agencies and emergency services to expedite the claims process. D. Deny claims until all properties affected by the disaster have been fully assessed. Answer C. Explanation. When handling claims involving natural disasters, it is crucial for the adjuster to coordinate with government agencies and emergency services. This helps to expedite the claims process and ensures that the claims are handled promptly and accurately during a large-scale event. Option A is incorrect because payments should be made only after proper claim assessments are completed. Option B is incorrect because future risks should be considered, especially in situations where further damages may occur. Option D is incorrect as claims should not be denied simply based on the scale of the disaster, and they must be assessed fairly and promptly. Question 11. Which of the following would be covered under a standard homeowners insurance policy? A. Damage caused by an earthquake. B. Flood damage to the property. C. Fire damage to the home caused by a lightning strike. D. Damage to a car parked in the driveway during a hailstorm. Answer C. Explanation. Standard homeowners insurance typically covers damages caused by fire, including those caused by lightning strikes. Option A and B are incorrect because earthquake and flood damage are usually excluded from standard homeowners policies and require additional coverage. Option D is incorrect because car damage is typically covered by auto insurance, not homeowners insurance. Question 12. What does the term actual cash value perceived refer to in insurance claims? A. The market value of the property at the time of the loss without accounting for depreciation. B. The cost to replace damaged property with brand new items, including installation costs. C. The original purchase price of the damaged property, less depreciation. D. The amount the insurer will pay, which includes both replacement cost and depreciation. Correct answer. C. Explanation. Actual cash value (ACV) is calculated by subtracting depreciation from the original purchase price of the damaged property. It represents the value of the property at the time of the loss, accounting for wear and tear. Option A is incorrect because it does not account for depreciation. Option B describes replacement cost coverage, not ACV. Option D is incorrect because it combines both replacement cost and depreciation, which is not how ACV is calculated. Question 13. Which of the following is typically excluded from a standard auto insurance policy? A. Bodily injury liability. B. Property damage liability. C. Damage caused by the insured's intentional actions. D. Theft of the insured vehicle. Answer C. Explanation. Standard auto insurance policies exclude coverage for damage caused by intentional actions. Insurance is meant to cover accidents, not deliberate harm. Option A and B are incorrect because bodily injury liability and property damage liability are standard coverages. Option D is incorrect because theft of the vehicle is generally covered under comprehensive coverage. Question 14. In liability insurance, what does negligence refer to? A. The failure to fulfill a legal obligation or duty of care resulting in harm to another. B. The intentional harm or damage caused to another person or property. C. A natural event such as a storm or earthquake. D. The failure to maintain property according to legal standards, regardless of consequences. Answer A. Explanation. Negligence occurs when a person or organization fails to exercise the appropriate care in a situation which leads to harm or damage to another party. This is the basis for most liability insurance claims. Option B is incorrect because intentional harm is not considered negligence and is generally excluded in liability claims. Option C is incorrect because natural events are not considered negligence. Option D is incorrect because negligence requires that the failure leads to harm or damage. Question 15. Which of the following scenarios would likely be covered by a business owner's policy? A. Employee injury while commuting to work. B. Damage to business property from a hurricane. C. Loss of business income due to a fire in a competitor's business. D. Lawsuit from a customer alleging discrimination by the business owner. Answer B. Explanation. A business owner's policy BOP typically covers damage to business property caused by certain risks including hurricanes. Option A is incorrect because injuries during commuting are generally covered under workers' compensation, not a BOP. Option C is incorrect because loss of income due to a competitor's fire is not covered under a BOP. Option D is incorrect because a lawsuit alleging discrimination would typically be covered under a separate liability policy, not a BOP. Question 16. Which of the following is a key difference between a claims-made policy and occurrence policy? A claims-made policy covers incidents that occur during the policy period, regardless of when the claim is made. B. An occurrence policy covers claims made during the policy period, regardless of when the incident occurred. C. A claims-made policy only covers claims that are both made and reported during the policy period. D. An occurrence policy is typically less expensive than a claims-made policy. Answer C. Explanation. A claims-made policy only covers claims that are both made and reported during the policy period. This means that if a claim is made after the policy expires, it would not be covered unless an extended reporting period is included. Option A is incorrect because claims-made policies only cover claims made during the policy period, not the occurrence. Option B is incorrect because an occurrence policy covers incidents that happen during the policy period regardless of when the claim is made. Option D is incorrect because occurrence policies are often more expensive due to their broader coverage. Question 17. What is the primary purpose of an insurance exclusion? A. To specify the coverage limits for each type of insurance claim. B. To clarify the situations or risks that are not covered by the policy. C. To provide a list of deductibles that apply to different claims. D. To outline the specific payout amounts the insurer will provide for various claims. Answer B. Explanation. Exclusions in an insurance policy are used to clarify what is not covered. These exclusions help define the boundaries of the policy's coverage. Option A is incorrect because exclusions do not specify coverage limits, but rather what is excluded from coverage. Option C is incorrect because exclusions are not related to deductibles. Option D is incorrect because exclusions do not address payout amounts, but they specify coverage limits for particular situations. Question 18. Which of the following is an example of a moral hazard in insurance? A person who is more likely to file a claim because they know their policy covers the loss. B. A person who lives in an area prone to natural disasters and purchases high levels of insurance coverage. C. A person who consistently maintains their property in good condition to avoid damage or loss. D. A person who deliberately causes damage to their property to collect an insurance payout. Answer D. Explanation. A moral hazard occurs when an individual takes on more risk because they know they are covered by insurance, or as in this case, deliberately causes damage to their property to receive an insurance payout. Option A is incorrect because being more likely to file a claim does not constitute a moral hazard if it is legitimate. Option B is incorrect because living in a high-risk area and purchasing appropriate coverage is not a moral hazard as it is a responsible action. Option C is incorrect because maintaining property in good condition is a sign of responsible behavior, not a moral hazard. Question 19. Which of the following is typically covered by a standard life insurance policy? A. Medical expenses incurred after an accident. B. Loss of income due to temporary disability. C. Death benefits paid to a beneficiary upon the insured's death. D. Property damage caused by the insured person. Answer: see explanation. A standard life insurance policy provides death benefits to the beneficiaries upon the death of the insured person. Option A is incorrect because medical expenses are generally covered by health insurance, not life insurance. Option B is incorrect because loss of income due to temporary disability is typically covered by disability insurance, not life insurance. Option D is incorrect because property damage is covered under property insurance, not life insurance. Question 20. Which of the following best describes the subrogation process in insurance? A. The process by which an insurer reimburses the policyholder for the full amount of the claim. B. The process by which an insurer transfers the policyholder's claim to a third-party contractor for resolution. C. The process by which an insurer seeks reimbursement from the responsible party after paying a claim to the policyholder. D. The process by which the policyholder assumes full responsibility for the loss after receiving compensation from the insurer. Answer: C. Explanation. Subrogation is the process by which an insurer seeks reimbursement from the responsible party after paying a claim to the policyholder. This ensures that the insurer does not bear the cost of a loss caused by someone else's actions. Option A is incorrect because subrogation involves recovering costs, not reimbursing the full amount to the policyholder. Option B is incorrect because subrogation does not involve transferring claims to contractors. Option D is incorrect because subrogation allows the insurer to recover from a third party, not the policyholder. Question 21. Which of the following statements best describes liability coverage at ECA homeowners insurance policy? A. It covers damage to your own property. B. It covers damage caused by you to someone else's property or person. C. It provides coverage for damage caused by natural disasters. D. It covers your medical expenses following an accident. Answer: B. Explanation. Liability coverage in a homeowner's insurance policy protects the insured in the event that they cause injury or damage to someone else's property or person. Option A is incorrect because damage to your own property is typically covered under property coverage, not liability coverage. Option C is incorrect because natural disasters are generally covered under separate policies like flood or earthquake insurance. Option D is incorrect because medical expenses for the insured are covered under health insurance or specific medical coverage within a homeowner's policy. Question 22. Which type of insurance policy typically covers damage to a tenant's personal property within a rental unit? A. Homeowner's insurance policy. B. Renter's insurance policy. C. Automobile insurance policy. D. Life insurance policy. Answer: B. Explanation. Renter's insurance typically covers damage or loss of personal property within a rental unit as well as liability for accidents that occur in the rental property. Option A is incorrect because homeowner's insurance covers personal property for homeowners, not tenants. Option C is incorrect because automobile insurance only covers damage to or caused by vehicles. Option D is incorrect because life insurance is designed to provide financial benefits upon the insured's death, not property damage. Question 23. Which of the following best describes the term deductible in an insurance policy? A. The maximum amount the insurance company will pay for a covered claim. B. The amount the policyholder must pay out of pocket before the insurance policy begins to pay. C. The percentage of the total claim that the policyholder must cover. D. The amount of time the insurance policy remains in effect. Answer: B. Explanation. The deductible is the amount that the policyholder must pay out of pocket before the insurance company begins to pay for a covered claim. Option A is incorrect because the maximum payment by the insurer is the coverage limit, not the deductible. Option C is incorrect because the deductible is a fixed amount, not a percentage. Option D is incorrect because the term deductible refers to payment, not the duration of the policy. Question 24. Which of the following types of insurance would typically cover damage caused by an earthquake? A. Homeowners insurance. B. Flood insurance. C. Earthquake insurance. D. Auto insurance. Answer: C. Explanation. Earthquake insurance specifically covers damage caused by an earthquake. Option A is incorrect because homeowners insurance typically does not cover damage caused by earthquakes unless additional coverage is added. Option B is incorrect because flood insurance covers damage from flooding, not earthquakes. Option D is incorrect because auto insurance covers damage to vehicles, not earthquake damage to a home. Question 25. What is the primary purpose of one insured motorist coverage in auto insurance? A. To pay for the repair costs of the policyholder's car after a collision. B. To cover the medical expenses if the policyholder is injured by an uninsured driver. C. To cover the cost of legal fees associated with a traffic accident. D. To replace the policyholder's car if it is stolen by an uninsured thief. Answer B. Explanation. Uninsured motorist coverage provides coverage for medical expenses and sometimes property damage when the policyholder is involved in an accident caused by a driver who does not have insurance. Option A is incorrect because repair costs are typically covered by collision coverage. Option C is incorrect because legal fees are usually covered under liability or personal injury protection coverage. Option D is incorrect because stolen vehicle coverage is generally covered by comprehensive insurance, not uninsured motorist coverage. Question 26. Which of the following best describes umbrella insurance? A. Is a type of health insurance that covers medical expenses above a certain limit. B. It provides extra liability coverage beyond the limits of other insurance policies. C. It covers damage to the policyholder's property in case of a natural disaster. D. It covers the costs of funeral expenses after the policyholder's death. Answer B. Explanation. Umbrella insurance provides extra liability coverage beyond the limits of the policyholder's other insurance policies, such as auto or homeowners insurance. Option A is incorrect because umbrella insurance is not health insurance. Option C is incorrect because umbrella insurance does not cover property damage. It covers liability beyond other insurance policies. Option D is incorrect because funeral expenses are typically covered by life insurance, not umbrella insurance. Question 27. Which of the following types of insurance would typically cover damage to a business's equipment due to a fire? A. Workers' compensation insurance. B. Commercial property insurance. C. Business interruption insurance. D. Professional liability insurance. Answer B. Explanation. Commercial property insurance covers damage to a business's physical property, including equipment, caused by events like fires, theft, or vandalism. Option A is incorrect because workers' compensation insurance covers employee injuries, not property damage. Option C is incorrect because business interruption insurance covers loss of income due to an event that disrupts business operations, not property damage. Option D is incorrect because professional liability insurance covers mistakes or negligence in the services provided by a business, not property damage. Question 20. Which of the following is generally excluded from coverage under a standard homeowner's insurance policy? A. Theft of personal property. B. Vandalism damage to the property. C. Damage caused by termites. D. Fire damage to the structure. Answer C. Explanation. Damage caused by termites is typically excluded from coverage under a standard homeowner's insurance policy. Homeowners are generally responsible for maintaining their property and preventing such damage. Option A, B, and D are incorrect because theft, vandalism, and fire damage are typically covered under a standard homeowner's insurance policy. Question 29. In health insurance, what does the term copayment refer to? A. The total amount the insurance company will pay for a medical procedure. B. The percentage of medical costs the insured must pay after meeting the deductible. C. The fixed amount the insured must pay for each medical visit or prescription. D. The total amount the insured must pay for their health insurance coverage. Answer C. Explanation. A copayment is the fixed amount that the insured must pay for specific services such as doctor's visits or prescriptions, while the insurance company covers the remainder. Option A is incorrect because copayment is a fixed amount, not a total amount covered by the insurance. Option B refers to coinsurance, not copayment. Option D refers to the total premium cost, not a copayment. Question 30. Which of the following types of insurance is typically required by law for vehicle owners? A. Life insurance. B. Disability insurance. C. Auto liability insurance. D. Homeowners insurance. Answer C. Explanation. Auto liability insurance is required by law in most states to ensure that vehicle owners can cover damages or injuries caused to others in an accident. Option A is incorrect because life insurance is not required by law. Option B is incorrect because disability insurance is not required by law for vehicle owners. Option D is incorrect because homeowners insurance is not required for vehicle owners but for homeowners.